Hey YouTube, what's going on? Chris here. Want to bring you all an update on Litecoin. Right now we're at 134.46. We're down 1.29%. And what we're going to do today, guys, we're going to be paying attention to the moving averages. We're going to work through the time frames a little bit. We're going to be looking at a few of these oscillators and candle formations. And I also want you to pay close attention to the fact that the candles are getting tight. Okay, when the candles start to get tight like that, you're going to be looking for a break. And what we do with technical analysis, we plan for the upside as well as the downside. So as these candles get tight, like you're seeing right now, guys, on the 4-hour chart, you get prepared for whether big volume is going to come into the upside or to the downside, and if this 20 EMA is going to continuously hold for us as support. We've wicked through it a few times, and the bulls are defending it right now, so we're in a really tight area. We're going to get into all this. I appreciate you guys being here with me. If you like this channel and you like what we do here, and especially if you like me covering Litecoin, guys, like, subscribe, tell me down low. Appreciate you being here, and let's do this. So main thing I'm paying attention to, this has just been a beautiful move, guys, and what you need to do, you have to take your price range tool over here, and I'm going to go from the bottom of this move where we basically had a harami pattern or harami pattern. This is the mother body, this is the child right here inside, guys, and from there we got pushed to the upside. So it was a bullish harami pattern, and it happened on a stochastic cross right down in here. That's what you want to look for. You want to look for good candle formations with stochastic crosses. To me, that's very important. So what I'm going to do is take this price range tool. This move here, roughly, guys, this has almost been a 50% move to the upside. So we have to pay attention, and we have to be aware, like on the 4-hour here, this is a bearish engulfing candle that came in after this large push up. And you can see that bearish engulfing candle happened on a lot of volume, as well as while we're having this stochastic cross. And that's why I've been playing this stuff in on the 4-hour. I think it's very effective and efficient. And that's just my opinion. But you want to pay attention to this 20 EMA because it's acted as support throughout this entire move. So now we're going to see the bulls. They're defending it. You can see some wicks down in here. We're going to see if we get a break back up to test this 142.90, or if we're going to start breaking down through this 20 EMA and having candle closes. Then we would first look for support at 130, and then we'd probably look to about that 120 for support. And right now what it looks like on the 4-hour, we're in oversold conditions. We're at 0.77 and 1.50 on the stochastic RSI. So what you'd assume is that we'll at least have some type of attempt back up. Maybe only make it halfway up in here to 139, something like that. We're going to have to see what happens in the power that comes out of this, and if it comes out of this stochastic cross with good volume. Guys, volume is the ticket. It's the key. If you see these breaks, these breakouts, like you can see these impulse waves, they came on good volume. You want that volume. And this is what I'm trying to explain to people. I'm never going to rub the crystal ball for you, because in technical analysis, what you're trying to do is put the odds in your favor, and you're looking at things and you're saying, okay, I see a bearish engulfing candle that just came in on the 4-hour right there with massive volume and a stochastic cross to the downside. It might be time to take some profit, reassess the situation, determine where you want to start putting your buys back in. And that's the name of the game of trading, guys. It's not about guessing. I'm not a fortune teller for you. And you have to realize that all my books talk about this. Rule the freaking market, all the ones I've been telling you about that I've been studying, they say that it's about putting the odds in your favor. And when you're wrong, you want to cut it as fast as possible. Get out of that trade and say, okay, let's reassess the situation. And when you're right, you want to let it ride. You don't want to put your stop up too close where you're getting pinged out or wicked out. You want to give it time and space to breathe. Do you see after each one of these pumps we pumped up, what do we have? A retracement. A pump, a slight retracement. Pump, retracement. So now we're looking to see, are we going to find support right in this area, and we're going to come up and try to make even another higher high, or are we going to pull back more onto this purple trend line that I'm going to be paying attention to, that the bulls were buying up back in here, then down to this 50 moving average, and then the 100 moving average, and then this blue trend line that I have down there. And that's what I like to do. I like to work through the time frames. So I'll start in even at like the 30 minutes, like I did in the video with you guys just recently. I think it was yesterday. Started at 30 minutes and worked our way all the way back to the day. And we're going to get out to the day and the week as well, because I want you to pay attention. On the short term, it's looking like we're oversold, but in the longer term frames, the 1 day, the 12-hour, that type of stuff, guys, it's looking like we need more of a correction. Okay, so now let's go to that 1 day. first, just so I can show this to you. Okay, so on the 1 day, our stochastics at 95 and 89, so we're very overbought on the 1 day. Let me clear some stuff off here for us. Okay, get that out of there. Get that out of there just so you can see the candle formations. Okay, so what happened, guys? We're having a potential stochastic cross. There was some good selling volume there. This was basically a long leg doji up there, so lots of indecision, fighting back and forth. And now we're going to have to see today if we get some type of confirmation in a lower close today than what we had, or if we're going to try to push back up and have a higher close than where we closed at that doji. But that doji is about textbook. That's perfect. That's a doji. Sometimes, guys, there's too much body in between or whatnot. This truly shows the fight between the bulls and the bears. We are at a critical position right now. So that's why I'm saying, you know, on the 4 hour, you could see our stock was so oversold, but now we bump it out to the 1 day, and you're seeing that we're overbought. Then if we take it out to the week, take a look where we're at. We're at 197 with a downside cross potentially happening. So this is the type of stuff that I'm looking for, guys. I just want to pay attention to it, and I want to put myself in the best position because, see, even after this spike here, we had a retracement, and it's healthy, guys. That was almost 3 weeks where we had a retracement, and then we set a nice higher low, and then what we would want is another higher high to come back up here and try to challenge this 175. That's going to be so much healthier than us continuously shooting straight up. What happened, and this is what I want to point out to y'all, what happened when we went straight up last time? You see, I want something healthy. Do you see how this was brewing over here? This was a nice uptrend. You know, you're making good gains, good profits, but you're also having nice retracements. You don't want the celery stick going straight up, or the, you know what I mean, a house built on stilts, guys. Anything that does that, it's going to pop. And that's exactly what happened. But what's so good is if you can identify this stuff and you're able to sell even out in this area, or once you saw that candle form on the 1 week, you still could have got out at around $234 right in there. Then you could have waited and paid attention, and what we were having was lower highs and lower lows until the supply and demand shifted, and then we started to have those higher lows. But we're basically going on, let's see, guys, week 7 of being bullish here. So there's going to have to be some retracement at some point, and that's where I just want to protect myself. That's what I'm trying to do. So I want to bring this to y'all. Pay very close attention. Just wanted this to be a quick one, but candles are getting tight. Pay attention to the candle formations. Look at the stochastic RSI. Work through the time frames. Pay attention to the 20 EMA. And just really do your due diligence in your studying, y'all. That's the best thing that I can tell you, is just really do your studying. And I'm going to try to help you the best that I can. So I'm here for you. God bless each and every one of you. If you like these videos, like, subscribe, hit that notification bell. I don't want to be the fortune teller for you. I don't want to rub the crystal ball. I don't want to have the thumbnails of saying, hey, is Litecoin going to $10,000 tomorrow? Let's get past $150 first, guys, and then we'll start talking. But just be very careful out there and really do a lot of studying for yourself. Take care.